This problem is exercise 6.24. It is a bank reconciliation. And so what we need to do is reconcile the difference between what our books say we have as far as cash is concerned and what the bank says we have as far as cash is concerned as of the end of the period, of the month in this case. We're actually doing the month of July. So they gave us information from June, but that's some information to help us to do the July bank recon. So first things first, we can see that the bank said we have $8,650. Our books say we have $9,250. You know, what's the big deal, right? Is the bank taking money from us? Well, maybe so. We don't know. That's why we do a bank reconciliation. And this is a really key control to find any kind of fraud. One thing I'll point out real quickly is you never want the same person who has control of the bank account to also do the recon, because they could be taking money and then basically checking up on themselves and hiding it for a long period of time. This is one of the key ways that many small businesses have to deal with fraud. So always have different people do the bank reconciliation versus having the books. This is really important. So let's go ahead and do this. Typically speaking, the accounting department will do this. And what that means is accounting departments don't have control of the accounts. So you don't see an accountant with the checkbook. You see an accountant get the bank statement in, while a manager somewhere else is going to have the checkbook. So first of all, let's take these amounts and put them as our beginning balances, right? And then let's go ahead and do some adjustments. So we'll start with the bank adjustments. So what do we know about that the bank doesn't know about? Well, it turns out we had some deposits that were made. And if you look over here, you can see July deposits that were made. They're different from the books. So did we have any deposits that we put in the bank that didn't make it in time to get shown on the bank statement? And so we'll need to do a little calculation. We'll start with the deposits that we say we made. It says we made $5,810 worth of deposits. The deposits the bank says we made were $5,000. However, notice that some of those deposits the bank said we made actually came from June. So 1,540 came from June. So the July deposits then were 3,460, and I made it a negative number just because we're going to compare that to the deposits for the books. So the books say we made 5,810. The bank says they received 3,460 in deposits for July. That means we have 2,350 in deposits outstanding. So now we can see that and put that into our reconciliation. Now let's look at the outstanding checks. So outstanding checks are checks that we wrote, but they haven't cleared the bank yet. I know we don't do a lot of checks nowadays in this world, but there's still situations where payments are made that haven't cleared the bank. And so it says that in our books that we wrote $3,100 in checks, and it says that the bank cleared 4,000 of those. But of those 4,000, some were from the June activity. In other words, we didn't have $4,000 worth of July checks clear. We had $4,000 worth of checks clear. 2,000 were from June, and so only 2,000 of the July checks cleared. And so that means that we still have 1,100 checks out there that haven't cleared yet. So we need to put that into the equation. And so now that if we take the beginning plus the deposits that need to be added minus outstanding checks, we get a correct balance or an adjusted balance of 9,900. Our books aren't the same as that, so that means there's some things that are missing. So specifically speaking, the bank, we're looking for things the bank knows about but we didn't know about, and one of them is a note that was collected. So some business will do this where they'll, instead of having the client pay them directly, the client will deposit the money in the company's bank account. So let's say you have a client that owes you They don't bring you a check or mail it to you directly. They put it in your bank account for you. And this is just a service, especially if it's a small or medium-sized business. Sometimes that administrative side is very helpful and also is a good deterrent for fraud. That's why it might be done. So we need to include that. We also need to deal with this service charge the bank charges us. And we also need to include this NSF check that bounced. It wasn't our check that bounced. Someone paid us. They owed us money, they paid us, and then the check bounced. And so that money we thought was in our account, well, it turns out it's not. We'll start out by adding the money from the note that was collected. Then we'll subtract the service charge of $15, and then we'll remove the $335 from our balance because the client paid us but the check bounced. And so now we have the correct balance of $9,900. See, it reconciles with the bank, and so now we know where everything was, and we're almost done. So we're satisfied. We know where all the money is and everything's correct, but now we need to do an adjusting entry for these adjustments for things that we didn't know about before. We don't adjust the bank stuff because that's the bank's problem, right? That's gonna be stuff they're gonna have to deal with. We only have to adjust the things that impacted our books. And so if you come down and you do a journal entry, leave the cash blank. That's going to be the amount. As a matter of fact, you can leave that off too. And then you just put in, well, the office expense bank service charge of $15. The accounts receivable needs to go back on. So that's 15, that's 35, and then we collected $1,000. Altogether, that impacts our cash. 1,000 versus 3,000. 1,000 compared to 350. What does that need to be? Well, that's going to need to be a debit in order to get debits to equal credits. If it needs to be a credit, then you would do that. So you wait until the end to do the cash amount because that's going to be what works for you. And you're going to need this to be, so that's 350, so that's $650 in order for the cash debits to equal the credits. So now that we know we have the account with the bank reconciling with our books and we've done the journal entries, now we're completed. Now we're done with this